Hi everyone! In today's video, we're going to take a closer look at a company called VICI Properties together. Whether you're an investor, industry enthusiast, or just someone curious about emerging trends, this video is your go-to guide for understanding VICI's potential. VICI Properties was created in 2017 when Caesars Entertainment spun off some of its real estate assets. The real estate investment trust primarily owns casinos, with a significant portion of its rent coming from its properties on the Las Vegas Strip like Caesars Palace, Mandalay Bay, and the Venetian. VICI acts solely as a landlord to its casino operator tenants, who are responsible for paying property maintenance expenses, taxes, and insurance. The REIT's portfolio also includes other experiential properties, such as water parks, bowling alleys, and arcades. Over the past year, it has underperformed the S&P 500, which is why we'll take a closer look to see if the company might be undervalued. Expected price and various ratios suggest the company appears to be slightly undervalued. The payout ratio seems to remain within a healthy range even in the long term. Both FFO, funds from operations, and free cash flow per share have been growing year over year, which is a very important indicator. Debt levels appear to be slightly high, but the chart shows a declining trend over the years. If the company continues this trend, it could reduce its debt to the desired level within a few years. The annual dividend is $1.73, which the company pays in 4 quarterly installments. The next payment is scheduled for April 4th. The dividend growth rate is not particularly high. My personal minimum expectation is a 4% annual increase, especially for companies offering a high initial dividend yield. For now, the dividend seems sustainable, provided the company can maintain its planned growth trajectory. VICI's long-term strategy aims to provide solutions to its partners' needs both in the present and in the future. The strategy is built on 3 main pillars: real estate acquisitions, growth fund, and credit solutions. Real estate acquisitions. Acquire irreplaceable, mission-critical, non-commodity real estate offering place-based, scaled leisure and hospitality experiences in a triple net lease structure with industry-leading operators. VICI Partner Property Growth Fund. Work collaboratively with existing tenants and partners to invest in growth opportunities across real estate developments and capital improvements that achieve mutually beneficial outcomes. VICI Experiential Credit Solutions. Creatively provide debt capital to new and existing partners across experiential sectors that generates attractive returns and builds a strategic path towards potential future real estate ownership. VICI's investment strategy aims to increase shareholder returns. The strategy is built on 3 main pillars: external growth, same-store rent growth, and dividend yield. External growth. The company aims for sustainable AFFO growth through real estate acquisitions, growth fund strategies, and credit solutions. Same-store rent growth. A 1.7% rent growth driven by minimum contractual annual rent escalations, complemented by CPI-linked rent increases. Dividend yield. A 5.5% dividend yield supported by annual dividend increases since the IPO. In the current economic situation, companies similar to VICI generally do not perform the best, primarily due to high interest rates. Before summarizing the points from the video, I thought it was important to mention this. Summary. Payout ratio. The payout ratio is below the expected 75% level, and it looks like they will be able to maintain this next year as well. Debt. Currently, it seems somewhat high, but the trend is improving, and the expected interest rate cuts within the next year could provide additional support. Dividend. VICI offers a well-established high initial dividend yield, with growth above 4%. Dividend safety. There is currently no indication that the dividend is in significant danger, and the outlook for next year is promising. Overall, the company seems to be slightly undervalued, making it worth considering for any investor. Disclaimer. This video does not constitute investment advice. Do not make decisions based solely on the content of this video. Always do your own research to determine whether a company aligns with your investment strategy and portfolio. Thanks for tuning in to today's analysis of VICI Properties here on Financial Freedom. If you found this video helpful, don't forget to hit that like button and subscribe for more in-depth investment insights. I'd love to hear your thoughts. Do you think VICI is a buy at its current valuation? Or are you waiting for more clarity in the market? Let's keep the conversation going in the comments below. And as always, remember, building financial freedom is a journey, not a race. Stay informed, stay patient, and let's grow together. See you in the next video.